Hey there, Chris Marcus here with you again. Today's Friday, I believe March 10th. Yes, Friday, March 10th. And just a quick update for anyone who's out there wondering what the heck is going on with Wall Street. You hear a lot of talk of bubbles, and a lot of people seem to think this system as we know it is a bit fragile and Ponzi scheme-ish. And what's the real deal? What's actually going to happen? And so I wanted to give a quick recap. So if this is the first Arcadia Economics video you're watching, you can get a quick primer on what's going on, and especially a lot of people who think, myself included, that perhaps 2017 is the year where a lot of these issues that have been going on get resolved. So in short, after college in my misguided youth, I worked on Wall Street for a decade. And pretty much as that time went along, and then especially in 2008, 2007, 2008, when things fell apart, started realizing there's what we were told, what they teach you in business school, what they throw in the media, and then there's the other side of what actually happens. Um, the situation isn't good. It was funny when Bernie Madoff, the famous Ponzi scheme financier, got caught. He said his Ponzi scheme is nothing compared to the U.S. government. Unfortunately, I've come to find that to be incredibly true and accurate. And just in the same way that you had the dot-com bubble, and what was the response? More debt, more money printing, which eventually led to the housing bubble. And when that collapsed, what was the response? Of course, the debt's gone faster than ever, the money printing. If you ever take a look at the monetary base chart, it's worth Googling sometime. You can see actually how much money has been printed since then, because I think the magnitude and the extent often gets missed, where people know that things are a rigged game and the banks and Fed print a lot of money, yet don't really grasp how that went exponential following 2008. So if you Google monetary base chart, you might see things a little differently, shall we say. Um, but in either case, they say the debt is 20 trillion. Although if you factor in Social Security and Medicare, the estimates get into over 100 trillion, and let alone all the other unsustainable things that are happening within the markets with the big banks and the derivative books they have, and all these mortgages that they've gotten everyone to take out. And now we're talking about raising interest rates. So what happened last time they did that? Well, you had the 2008 housing bubble. So when I left Wall Street to write and speak out about these things was back in 2012, and to me it seemed pretty clear then that you were going to have some sort of similar event like 2008. But in my own opinion, I think this time it will be not just the banks or the housing market, but I've continued to think that it has to be pretty close to the point where these currencies finally get blown out. And I'll put it like this: nothing I've seen since then has changed my opinion of what has to happen. Just, again, it's a matter of the timing. Similar, if you saw the problems in the real estate market back in 2005, that didn't mean that you weren't right. It just meant that you had to wait a little bit longer. And by any rational measure that I can find, this is a similar situation where it is a matter of time. And certainly there's a lot of interesting folks who are generally pretty smart and wise, who seem to think that we're getting pretty close to events actually unfolding. And with that in mind, just a couple things to watch in March. Next Wednesday, on March 15th, you have a Fed meeting, always quite a circus, which in reality I wouldn't put too much stock into anything they actually say or do, because it's so absurdly fraudulent and schemy that in essence it doesn't matter. Yet to the degree that the Fed says, well, an alien's running the printing press now, and people react. Again, the way I look at it is that you have a massive bubble that's floating around, and there are a lot of different pins out there. Maybe one day OPEC says we're not taking the petrodollar anymore, or Trump or whoever the new overlord is decides to nuke Iran, or some or you get one of the Italian banks fail, or the eurozone. I mean, there's all these things that it's just at some point that bubble is going to hit one of those pins. So anytime the Fed is talking, that's a potential pin trigger. Also, next week you have another round of the debt ceiling debate. That's always a good one, which basically the U.S. has a limit, a cap that you can borrow up to this much, but not over, which was supposed to rein in the runaway spending, except every time they hit the cap, rather than stop cutting spending somewhere, they just raise it. So for anyone who remembers back in 2011 when there was actually an attempt to prevent it from being lifted again and say, no, this is the whole point, to stop spending money we don't have. It was a big event back then. You saw gold and silver skyrocketing, and could this be what changes the current status quo as we know it? Possible. Could it be something else that happens a year from now? It's possible too. But anyway, keep your eyes open next Wednesday. It'll be interesting to see what happens. Just a lot of things building together, and in the end, just record these videos to help explain what's going on. A lot of it's, even when I was working in Wall Street, was very confused by most of it until I started reading and understanding a different perspective that isn't commonly given to the public. So that's what we're here to do. And if you have any questions, post them below. I'd love to try and help get those answered for you. And in the end, I hope that you're just ready to have a beautiful weekend. You're safe and healthy wherever you are. And wish you the best weekend possible, and have a great day. Thanks.